Welcome to the channel, everyone. I'm going to be showing you guys today one of the best strategies that you can use if you are looking to day trade the S&P 500 and become a profitable day trader. What I love about this strategy is anyone can do it. It's really easy to learn, and you take your break of structure and your fair value gaps are the only two things you need. You combine those with the 5-minute chart on the S&P 500. You're set. You're set for life. I'm going to show you exactly how to do it on the charts. Let's go ahead and get started. Now, the thing about this strategy is it's so simple, but it's so strict at the same time. It takes hours to set up. Sometimes it takes 3 to 4 hours after the stock market opens for me to finally get the trade set up and get in. Sometimes I won't even take a trade the whole day just because I don't have that perfect setup because it is so strict. But also with that, when it does happen, 9 out of 10 times is it's going to work out like you planned because it is so strict. Now, when the market opens, you're really going to want to be sitting on the 5-minute chart waiting for those swing highs and swing lows to be formed, and you want to see a really small channel kind of forming, and what you're going to be trading is kind of the breakout and the retest of that channel is basically what this strategy is. So you can see here we're on the 5-minute chart. We have a nice little swing high right here, another swing high, and a swing low. So I just ended up marking these. So this was my swing high, down here is my swing low. We have this nice channel that we kind of bounced in between. We're waiting for that channel to be broken and to have what's called your break of structure. Now, when you have this channel, you want to see some type of trend forming as it's about to break that channel and break that structure. So in this instance, we're creating a small uptrend. You can see we have a high, low, and then we break it right here in an uptrend. If you see a really quick move breaking through it, it's usually not going to be the best because that was a impulse move and it's not going to be as consistent as these trends. You want to trade with the trend. The trend is always going to be your friend. And right here we have our break of structure. So now a break of structure is a candle body close above your swing high or swing low. That's the way I trade the break of structure. So this is not a break of structure. This is we tested it, closed below it. That is not a break of structure. The candle after that, the body closed above the swing high. This is what you would call a break of structure. So that's really your first thing you want to wait for is your swing high or swing low to form, and you want to wait for that break of structure to happen. Now, when that happens, you have to have a imbalance happen. Now, what is an imbalance? The imbalances that I use is what's called a fair value gap, and I'm sure a lot of you guys have heard of it, is it's a 3 candlestick pattern. So this is the one that broke the structure. This one has to be the one that's going to be in the middle of that 3 candlestick pattern that forms a fair value gap. Now, the way to know if you have an imbalance and if a fair value gap is formed is you want to take your first candle, you want to draw a box, and you're going to start the box at the top of your first candle. Now it's going to be the top of the wick, and then you're going to drag it to the third candle, which this is our third candle right here. You're going to do the bottom of the third candle, and again we're going to do the wick. So right here, this is the top of our first, the bottom of our third. This space in between is what's called your imbalance, and this basically happens when we break that structure that we have been testing before. So we tested it right here, tested it right here, tested it right here. We had so many buyers had to come in to break that structure that it ended up pushing it so high that sellers weren't able to react, and it's what's called an imbalance in the market. Now, whenever these imbalances happen, the stock market does not like it. The stock market is usually going to try to come back and try to fix that imbalance before it goes any higher. So now we have the two main things you need in the trading setup, which was a break of a structure, which was right here. On that break of structure, you have a fair value gap that formed. Now you're going to wait for price to come back and fill this imbalance. Once we fill it, you want to see price close out of it to confirm that we are going to go higher, and that's when you would enter your position. So we're going to go ahead and drag the box out to make it big like this, because usually it's going to take a little bit for price to kind of go up and then come back and slowly fill that imbalance. Now that we have our box on our 5-minute chart, you want to hop down to the 1-minute chart, and that's where you're going to get a early entry into your trade. Now that we're on the 1-minute chart, I want to see price come in and fill this fair value gap. And the tricky part is you never really know when it's fully filled, whether it's just going to tap in and then reject out of it, whether it's going to fully fill it. You never really know. So what I like to do is I like to shoot for a 50% mark. If it hits that 50% mark, I consider that filled. And if we end up closing out of it is when I would enter my position. So you can see here, we're on the 1-minute chart. You can see price was kind of going sideways. We ended up coming back, almost hit that 50% mark to a T. As soon as we hit it, we immediately rejected out of it. Now I entered calls right here, and my target was going to be just this swing high right here. I'm usually in and out pretty quickly. This move right here, these 2 candles, was 2 minutes. I made 22%. So it was a really quick trade, but it just shows you how strong it is. If we look at the rest of the day, price ended up going the whole rest of the day. Contracts hit over 200% on just this trade alone. Now, finding your take profit can be kind of tricky. I usually just do the most recent swing high or swing low on the 5-minute chart to enter and exit my trade, but a lot of the times the trade ends up going so much further. So what you can do if you want to try to catch more of the move is you want to hop over to the 1-hour time frame and you want to find the next level at which price may go to. So in this instance, we see price, we got in right here on this fair value gap. The next highest level is going to be your pre-market, and I usually like to do a body high and a wick high in the 1 hour. So your body high would be this level right here, and then your wick high would be this level. So these would be your next two levels at your take profit that you could have aimed for, and both of them got hit. So that was the exact trade that I took and how I was able to make just under $2,200 in only a couple of minutes. Now the strategy happens almost every single day, so let's just go ahead and scroll to a day where I remember it worked out really well again. Let's see, let's just do this day. So this was May 2nd. So what we're going to do is we're going to be on our 5-minute chart. We're going to wait and see a swing low. We're going to see a swing high. Once those are formed, we're going to draw them out. We're going to wait for this little channel to be broken. You can see we have a small little uptrend forming, low, high, low, and then this creates another high right here. But as we break it, we create this nice fair value gap right here. Again, this was our swing high. We broke it on this candle. We would take our fair value gap, which we're going to draw here, our box. You take the top of the first candle, draw it to the bottom of the third candle, and you're going to go ahead and drag that over. And you can see on this trade alone, came in, this one got filled completely, ended up you would have entered calls as soon as it closed out of it, you would have entered calls, target would have been that previous swing high, and it would have crushed that. Now the rest of the day it did, actually just kind of went sideways the rest of the day. But you can see that trade played out really well. And this was on May 2nd. Now let's just go ahead and scroll to another day to see if we can find that exact setup and see how it worked. So let's go to this day. So you can see we wait for a swing high. This is going to be our swing low. This was our swing low right when we opened out. As soon as we made this was our new swing high. This was our new swing low. We wait for these to be broken. You can see this swing high was broken on this candle right here. This candle did create a fair value gap. You would draw the box like that. Draw it over. You can see price came in, hit that 50% mark. As soon as we closed out of it, you would enter calls, and immediately you saw just a $3 move. This was a $5 move. You saw a $5 move immediately as soon as we closed out of the gap. So you can see this strategy works really well. It's so simple, but it's so strict at the same time. But if you can catch these moves and catch this strategy, it only happens about 1 to 2 times a day. But if you can catch it, you can make really good money just doing this strategy. So that's kind of the basic strategy that I use every single day. If you guys have any questions, let me know in the comments below. This is kind of my first YouTube video where I wanted to go a little bit more in depth on what I look for and what I wait for to be broken and wait for those fair value gaps and how I enter and exit on those trades. Now I did just open up a Discord as well. I am going to be leaving the link in the description. Go ahead and join if you guys want to learn more and watch me start live trading. I am going to be doing live trading sessions, live back testing, live Q&As. I'm also going to be doing small account challenges if you guys are interested in that. So go ahead and check it out. Let me know what you guys think. We'll see you in the next one. See you.